Good morning, everyone. Today, we're going to challenge some deeply ingrained assumptions about managing multi-generational family wealth, particularly when it comes to the critical responsibility of supporting aging parents. In my 3 decades of managing institutional capital, I've observed a consistent and often devastating pattern. Even sophisticated investors frequently apply generic retail retirement tools to complex, long-duration family liabilities. This conventional wisdom, saving cash, buying low-yield bonds, or relying on notoriously inefficient long-term care insurance, is mathematically flawed. It treats a complex, multi-decade financial challenge as a simple, short-term liquidity need. This approach leaves families vulnerable, eroding their financial foundation instead of strengthening it. We need a fundamental shift in perspective to truly secure the well-being of our loved ones. The primary risk we face isn't merely longevity itself. It's a far more insidious and often overlooked factor we call the medical inflation spread. This refers to the historical trend where the cost of specialized senior care consistently rises 200 to 300 basis points faster than the Standard Consumer Price Index, or CPI. Think about that. If CPI is at 3%, medical care costs are soaring at 5 to 6% annually. A standard SAFE portfolio, perhaps yielding 4% from conservative bonds or general savings accounts, is actually losing purchasing power relative to the very liability it's meant to fund. You're effectively going backward, fighting a jungle war against accelerating costs with what amounts to a pea shooter. This gap is a silent killer of financial plans, eroding capital year after year. This brings us to the counterintuitive yet profoundly effective solution. To secure your parents' well-being without jeopardizing your own financial footing, you must fundamentally shift your approach. You must stop merely saving for their care and instead start investing in a dedicated anti-fragile care endowment. The concept of anti-fragility, popularized by Nassim Nicholas Taleb, describes things that don't just withstand shocks, but actually benefit from them. In this context, we need a financial mechanism that doesn't just survive economic volatility and medical inflation, but actually strengthens and expands its capacity precisely because of these pressures. This endowment becomes a self-replenishing well of liquidity, transforming a depleting burden into a growing asset. To build this anti-fragile endowment, we need a specialized framework. We aren't simply looking for general investments.